Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White here with Kevin Hinks, my co-host. But let's bring in our next guest for our cash tag segment. It's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you.
So we're talking Nike. Last quarter got hammered. They got some inventory issues, a slowdown in China. Direct-to-consumer is doing really well, but what kind of data do you guys have on Nike ahead of this report?
You know, when it comes to Nike, inventory problems, that sort of thing is going to be the most difficult for us at LikeFolio to see. We have to acknowledge that before we get started. We don't have much insight into how much the company has purchased. What we look at really is consumer demand. And for Nike, you know, I think we can tell a pretty good story. I think Nike can tell a pretty good story as it heads into 2023. When we look at, you know, consumer happiness for Nike at this point, you know, kind of middle of the pack. Under Armour certainly leading the way. Nike's drifted off a little bit over the past couple of years, down to 68% happy. But everybody's receiving the gift that is Adidas's own goals and fumbles at this point, and you know, Adidas certainly giving away a lot to Nike and Under Armour at this point. So I think Nike's in pretty good shape with the consumer. The Air Jordan line doing very, very well. But really the story for us, the long-term story for Nike is going to be that direct-to-consumer move that they've been making. And so when we look at Nike global web visits, so people visiting Nike-owned websites and domains to shop with the company, we see a really nice increase year over year right now at the time when you would want to see it in the holiday shopping season. A lot of people, you know, at all-time highs in terms of people going to that Nike website and some of their affiliated brands. So I think, you know, overall, you look at this company and you say, yeah, inventory problems, you know, short-term problems in China, that sort of thing. But from a long-term lens perspective, I do think that there's opportunity in Nike because of the way that they are executing so well on that shift to direct-to-consumer, putting you know, third-party retailers like Foot Locker at risk from here. So we like what Nike's doing. We like their strategy. And from our data, we can say that from a consumer perspective, they're executing very, very well.
You know, Andy, this company, it's easy to beat up on them right now because of all the question marks around them. But their revenue from 2012 to 2022, $25 billion to $46 billion. Their margins, 43% to 46%. Operating margins have been over 13% this whole time. This direct-to-consumer is going to add to all those margins, right, as they keep taking in the lion's share of that margin. So, the question is, you're right, Adidas has shot themselves in the foot, I mean, for the umpteenth time. But here's my question, Andy. Now, you can't compare the size of these two companies, but what strength are you seeing here in Under Armour? This is a kind of a surprising chart you gave us with Under Armour outpacing in terms of happiness. How are they coming back from the dead?
Yeah, it's really happiness. I think, you know, when you look at Under Armour, it's a different company than Nike for sure, both in terms of size and, you know, what they specialize in. But for Under Armour, it's really about the athleisure lines and the activewear lines a lot more than anything else. And so I think they've done a good job in that respect. I think some of their displays in some of the stores like at Dick's are better than Nike's. And so I think that overall Under Armour's just kept itself out of controversy a little better than the other two companies. But Nike is still king of the hill by far. They've still got Michael Jordan's name. You know, how long has it been since he's even been, you know, playing basketball? Sure. And he's still driving enormous revenue, just an absolute monster. And so, you know, with Nike, I agree with you. Look, I think this company could be at 50% margins on increasing, you know, vast growth revenues within the next couple of years, which is just unbelievable in this type of space. Right. And so I think we've got to tip our hat to Nike's executive team and say they've probably got an optimistic outlook for 2023 with a lot of caveats from overall macroeconomy.
Yeah, when you look at this, Andy, with the different brands that they have, the more people going into stores, I think that's the key for me is that foot traffic's starting to pick up. We saw Foot Locker's results. They still have that tie-in with Nike, although Nike's pulling away a little bit there. Is this quarter going to be based on whether, they had discounts, which is going to hurt their margins? That's expected to actually fall year over year. Or is it going to be one of those resurgences where, hey, direct-to-consumer is more than offsetting some of those margin issues and inventory issues that they had?
Yeah, again, we don't have much insight into their inventory situation or how much is sitting on the shelves or how tough it's been for them to get product to consumers. But what we can say is that demand is very strong. I like seeing what we saw at a Foot Locker. When you combine that with what we're seeing on the direct-to-consumer side at Nike, it tells you, the shoe market overall pretty strong. Maybe not at the very highest end, the very highest margin, the kind of, exclusive drops and things like that are hurting a little bit. But I think overall, shoes, kind of like the lipstick index, can predict economic uncertainty. I think people can still go out, even in tough economic times, and get the shoes that they want and feel pretty good about it. It's not a vacation, it's not a car, but at least I can get some cool shoes that make me feel good as I walk around. And I think that's what's happening, and Nike's benefiting.
Yeah, you got those global website visits up 19% year over year. What kind of earnings score do you have for Nike going into this report?
Yeah, it's only plus 14, but I do think that there's more upside than downside for Nike this year, especially since they took the heat last quarter and the market's down so much. I think even with a plus 14, I really wouldn't be too scared to take a overall bullish position here with some of that great risk defining strategies that you guys teach us all so well how to do.
Yep, that's our cue here, Kev. All right, Andy, appreciate all the data. Have a good day.
Thanks, you too.
All right, that's Andy Swan, co-founder of LikeFolio, helping us break down Nike. Kevin.